Greetings. Welcome to my weekend market recap, 18th December 2022. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website, Twitter page, and YouTube channel. You are most welcome to make use of them. All of these are open to the public. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems for my trading. All the Q components run on Metastock platform and the technical component runs on TradeStation as well. I'll use these systems today, analyze the live market as usual, but I will also spend some time looking back and observing how some of the breadth indicators, especially the Hindenburg indicator, as displayed on Q systems, came very handy in picking the top at the end of 2021. Sometimes we need to look back to realize how these systems and indicators and signals were useful, and therefore we think they will continue to be useful in future also. I will also look at how Q systems once again helped me buy at the bottom. Market was very low last couple of days. It was coming down. Friday was another down day, but I could buy some stocks on Friday. At least one I shared publicly before knowing the results as usual. I'll analyze that stock and explain how Q systems helped me to buy on Friday. Before that, as usual, we start with a look at the global markets. Australian market, all ordinaries index, weekly came down for 2 weeks. The backdrop color is still neutral, yellow. In daily, price came down right after displaying the bearish headwind, possible reversal signal. On Friday, price broke below the trendline support. However, it closed with an indecisive shape candle. I will not like to short now because the yellow and white both direction lines are nearby. Instead, if price can go up and probably regain this trendline support, closing above that, then I will not mind looking for buy setups in the Australian market. Japan Stopics Index, as I mentioned, when we look back, we see how useful the Q signals were. When the bearish headwind came at the very top in topics, that candle also created a false upside breakout. Looking at that, at minimum, we would protect profit in existing long positions, and that would be helpful. After that, price has pulled back significantly. It has also created a lower high. Friday's candle shape and color both are bearish. Weekly candle shape and color both are bearish. I will not be happy to, let me refresh this, I would not short at the close on Friday, no question of being happy, I would not short because multiple trend line supports are nearby. However, in this case, unlike in case of all ordinaries of Australia, unlike all ordinaries of Australia, here weekly and daily both are looking bearish. I am not going to look for buy setups. Instead, if price can break below the two trend line supports, I will like to look for shorting opportunities. China CSI 300 index. CSI 300 is inside a triangle pattern. I will not like to buy or short at this point. I will not short because trend line support is nearby. I will not buy because trend line resistance is nearby. And of course, there is no Q trade setup as of Friday's close. What will I like to see? I will actually like to see it breaking out of the weekly trendline resistance. That will prove very bullish because earlier it had a very long downtrend. It created double bottom at which points bearish, sorry, not bearish, bullish headwinds appeared, created a false downside breakout at the second bullish headwind, and now if it breaks above the trendline resistance, that will be very bullish, which will also coincide with the breaking of the two daily trendline resistances. Will I wait for the second daily trendline resistance to be broken? No. If I see the first trendline resistance is being broken, I'll start to buy fundamentally strong stocks in the Chinese market. That is what I will like CSI 300 to do. That will make my buying decision easier. If it comes down, there are too many trendline supports, my shorting decision will not be so easy. What about India's Nifty 50, which was the strongest of the global markets earlier? In the last market recap, I explained how I shorted Nifty using futures options. Starting right from the very top, that was actually the day after Nifty 50 made new all-time high. The day after Nifty made new all-time high, a bearish headwind came in the daily chart. Again, looking back, and in this case, looking back couple of weeks, we see how useful the bearish headwind signal was. And the weekly also displayed bearish headwind in the same week, created a false upside breakout in the same week. And I took a series of short positions in Nifty, some using futures, some using short call. On Friday, price broke below trendline support. This week's candle color and shape both are bearish. However, there is a weekly trendline support nearby. The short call, that those were naked short calls that I had in India market on Nifty, they had a significant profit at the close of Friday, and I didn't want to take risk because they were naked call options. I booked profit in all of them. Seeing that price was coming down heavily, it was probably time for Nifty to recover somewhat, and then it may drop again. And also the weekly trendline support plus the daily yellow direction line support, they are nearby. That also led me to reduce exposure, especially because those were naked short call positions. So I booked profit in them. Am I going to buy in the Indian market? No. Both weekly daily are looking very bearish. There is no reason for me to look for buy setups. Instead, if price goes up little bit, comes down again, it will give the next go with flow trend following shorting opportunity, and I look to short Nifty or constituent stocks at that time. If price continues to come down from here, will I start taking shorts again? I'll be cautious about that because the stop loss will be far away from the entry price. I'll not like to short at this point. Instead, I like it to recover a bit and short at a higher price point. Higher price point which I hope to make a lower high. That will be the ideal shorting position for me once again. Overall, Nifty 50 is still very strong, isn't it? Just 1 week ago, it made a new all-time high. And the strongest of the markets is also now pulling down. What about FTSE index, UK market? Once again, when we look back, we see how the Q signals helped us. We would not buy when FTSE index was at trendline resistance. That was useful. Instead, we could short. Short from when? Short from right at the top when the bearish headwind came in the daily chart. Weekly had trendline resistance and daily created a false upside breakout at the watermark resistance. So weekly trendline resistance, daily watermark resistance, bearish headwind, false upside breakout. There were enough signals to short FTSE. The risk was very small. That has given significant profit. The weekly is looking bearish. However, daily is right at the yellow and white direction lines. Price is reasonably below the recent swing high. I'm not going to short now. I would have booked some profit on Friday when price came near the lower boundary. If I took a short using the bearish headwind signal or the first bearish flow following the bearish headwind signal. So I could short either at the top or at the bearish flow point, which also gave a flow short setup in the daily chart. Now it is too late to short and there is no signal to buy. That was a look at the global markets. None of them are looking bullish to buy, not at this point. What about USA market? Now USA market has dropped significantly in this year, and let's see at the look at the percentages here in radar finder on TradeStation Q Elite. I have put the 4 market ETFs SPY, QQQ, DIA, IWM. This finder shows the monthly percentage change from 1 month to 12 months. Over 12 months, the worst performer of the 4 market ETFs is QQQ, down by 31%. Then comes IWM, down by 21%, very closely followed by SPY, down by 19%, and lastly DIA, relatively strong, still down by 9%. All of them are down significantly over 12 months period. Now what happened exactly 12 months ago? Many things happened in terms of technical analysis of internal market health. something interesting happened in December last year, and I'm pointing to these skull signals, the Hindenburg signals that came right in December 2021. Hindenburg is a very unique signal, that is a market breadth indicator that comes at the very top when market is making new high, or enough number of stocks are making new highs. That is when the Hindenburg comes, because not only stocks make new highs, under the hood there are also enough selling. So when there are enough buying and also selling at the same time at the market top, then this unique signal comes. And there are very few systems that are able to plot Hindenburg so effectively. Q is one of them, HGSI is of course the other one. Hindenburg is not a signal designed by me. It was designed by a very renowned person, I'm forgetting the name. I implemented the signal here. And this is yet another example, as I mentioned, of looking back and seeing how Q signals, in this case internal health check signals, helped us to be protective of our equity. And since then we saw all the market ETFs have come down. Later on I look at the market ETFs charts, the external view. Let's continue with the internal view as of today. We are not of course expecting any Hindenburg now. The Hindenburg comes near market top or after a market rally. We are not at that position now. What can we see from this market breadth total view? A single chart view of market internal health check. Let's look back. When the yellow line, the percentage of stocks above 50 MA, hit the upper threshold, before knowing the result, as usual, I mentioned that it was overbought, and using Q guidelines I was not going to buy. That was very useful because price has pulled back from there. The yellow line itself has come down. It is not overbought anymore. It is at the neutral zone, 50% level. The market breadth total view custom index itself has come down for 4 days in a row. Only Tuesday it tried to go up, made a reversal kind of candle, fell sharply after the open. Not really reversal candle, fell sharply after the open. And then Wednesday, Thursday, Friday it came down. Friday's candle is very indecisive. What do we have Thursday? Thursday we have high distribution count. 4, very high distribution count. And we also have a magenta color in the candle, that is the Phoenix signal, designed by Mr. Ian Woodward. May him rest in peace. Phoenix signal may come near the bottom. So Phoenix has come with heavy distribution, and that was followed by indecisive candle. What would I like to see? I would like price to go up from here. Why? Because in the past I have seen after a swing low, if Phoenix comes, then I start to look for Eureka signal or accumulation count. Accumulation count either comes on the same day as Eureka signal or before that. So it's a faster signal. I look for either of them. What will happen if those comes, those or one of them, at least accumulation count come? I'll also have another bullish theory that after an indecisive candle at the bottom, if a bullish candle comes, that is overall bullish. So that is what I am going to prefer. I hope it will happen like that, that a bullish candle with accumulation count and possibly Eureka to come next week so that I can start to buy. By the way, you may be hearing many dogs. I live in a village, there are many dogs here, and sometimes another dog may visit our village from another village or another locality, and the dogs in our village will start barking to protect the village from outsiders. So that may be happening right now. Many dogs are barking. Apology for that. I'll continue. I hope you can hear me. Now, I mentioned that I would like market to go up from here. Why? There are many reasons as I explained. Another reason is I am not going to find easy shorting opportunity now because price is reasonably below the recent swing high. I would have shorted at this point, not now. Now I am booking profit. Individual stocks may have shorting opportunities. I look at some of them if I have time. Now, what kind of stocks am I going to prefer? If I look at small cap versus large cap, small cap is still underperforming. It is still having lower high, lower low downtrending. It will need some work before small cap versus large cap turns up and becomes uptrending. I'll wait for that. What about growth versus value? It was falling sharply earlier, and as I mentioned and showed in the last market recap, now it is flattening out for several weeks. It's equal performing. What will I like to see? I like to see the small cap versus large cap tilt up, becoming in an uptrend, and I will also like to see growth versus value go up, becoming in an uptrend, so that I can buy some stocks that are small cap growth stocks. They give lucrative buying opportunities when they are caught at the swing low point, and many of those small cap growth stocks are languishing now. They may give lucrative buying opportunities. All of these are if market goes up next week. Now another reason I am looking for bullish trades starting from Friday is something that I tweeted on Friday during market hours. I tweeted around 11 a.m. on Friday with a live chart of Q edge bucket analysis, and I showed that the percentage of stocks in the lowest bucket, that is the percentage of stocks below lower Bollinger Band, hit 40%. And more often than not, much more often than not, when it hits 30 to 40% level, market recovers. Does it turn into an uptrend? May not be, but it recovers enough to give me some profitable swing long trades. Does it always do that? No. Sometimes from 40 it may go to 50, 60 or even lower. But as I said, more often than not, much more often than not, when it hits 30 to 40% level, it recovers enough to give me profitable long swing trades. And because of that phrase I used, much more often than not, reward risk wise, it is worthwhile taking some trades when it hits the 30-40% level in bucket analysis. This is a snapshot of Q edge at 11 a.m. Eastern Standard Time, and I was watching the market for a while more. I saw in real time this percentage did hit about 45%. That was oversold enough for me to look for buying opportunities. So not only from market breadth from Q global but also from Q edge bucket analysis, I am preferring bullish trades now. Now let's look at the market ETFs in the USA market. SPY. I'm using Q Elite now, weekly chart and daily chart at a glance template. Now at the left side we see December 2021. Remember I showed that is when the Hindenburg signal came in the market breadth. And what did SPY do after the Hindenburg signal came in market breadth total view? It continued to go down, 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 making lower high and lower low. What happened at the bottom? It created double bottom with bullish headwinds in weekly. It is still continuing to have lower highs. What am I expecting now? What is my preferred movement for SPY? My preferred movement is for the weekly to go up and break the trend line resistance so that I have a higher low, and if the breakout happens I'll have a breakout with higher low, and that will be the optimal point in terms of weekly chart to start buying again. What kind of technique? Using breakout technique. Was that the only possible technique for Q analysis? No, we could use the reversal technique using the bullish headwinds earlier, and now I am hoping, you may say, I am rooting for SPY to break out of the trendline resistance, which will mean in the daily also it will break out of the trendline resistance. That will not happen on Monday, of course. It will take a few days to break the daily trendline resistance. Will I wait for all those days? No. Because I saw in Q Edge bucket analysis, market is oversold enough for me to look for buy setups. I am happy to start buying from Monday. In fact, as I mentioned, I bought some stocks on Friday also using different setups, not only breakout setup that I can use to buy stocks. Market is oversold enough for me to buy, but SPY itself of course does not have any buy setup. It is oversold in terms of falling to the lower boundary level, but clearly there is no buy setup. Can it fall more? Of course, the weekly is actually looking quite bearish. It can continue to fall more, but individual stocks may have buy setups. I will explain with at least one example later. So this is SPY. Now looking back, let's look back once again and see how Q signals were useful as proved by what I shared publicly before knowing the results. Once again, I showed the weekly trendline resistance and the daily trendline resistance and said that I was not going to buy at those points. That was very helpful. Once again, price came down. Not only SPY had a trendline resistance going into this week, IWM had the same. And once again, the trend lines drawn in Q systems proved to be extremely helpful. Price sharply came down from the trend line resistance. In fact, multiple times, both in weekly, daily. And one gentleman asked me recently, I probably mentioned that in the last webinar also, that do I always avoid buying if there is a trend line resistance nearby? And my answer was yes. I never buy if a trend line resistance is nearby. I never short if a trend line support is nearby. Any trend line resistance support? No. These are the Q memory trend line resistance support. These are very smartly drawn, of course, automatically drawn. IWM weekly is still bearish, just as we saw in case of SPY, but daily is oversold and daily has an indecision signal at the low. That is also one more reason I will prefer the market to go up now. My low risk trading opportunities will come more easily. If price continues to go down, low risk opportunities for shorting will not come so easily. What about QQQ? Weekly is bearish, just like SPY IWM, daily has a trend line support nearby. So it will be nice to see for QQQ to come to the trend line support and reverse, and even better probably create a false downside breakout and reverse. That will give very low risk buying opportunities at the bottom. The weekly is bearish, but I may watch out for the trend line support reversal in daily. And lastly, Dia, weekly is bearish though it has a lower tail, and this ETF also has a bullish indecision at the bottom and price is right at the white and yellow direction lines. I'll be happy to see Dia going up from here. Low risk buying opportunities will come more easily. That is my view of the market. It is clearly bearish, but I am hoping for the market to go up from here because it is oversold from some angles, and because if it goes up, the lower risk buying opportunities will come easily. And let me show one trade that I shared publicly on my website superiorprofit.co under forum. Let's go to the forum. The village dogs are relentless, isn't it? Under the 360 degrees category, I share live analysis always before knowing the results, and one I shared on Friday. Let's look at the snapshots. The steel industry relative score using Q edge jumped up, a very big jump from 7 to 146, from near the bottom of all industries to near the top of all industries in one day. Huge jump. And though Friday market was bearish, the steel industry itself was up by a non-negligible percent, 1.1%, and the alternate industry jumped in score as well, and alternate industry, iron and steel, of course, same, looked from a different viewpoint, that also did well. This jump in score showed acceleration. That was a very good reason to buy, and I found this stock X US Steel. At that time it was up by 5%. I shared it using live analysis, you can see, before 11 a.m. And remember my post on Q edge bucket analysis. Around that time I was seeing the bucket, that is the percentage of stocks in the lowest bucket hitting 40% or so, or more actually. So it was oversold enough, and in that oversold market I found an industry that was jumping up, accelerating, and a stock in that accelerating industry up significantly. The stock is undervalued with good earnings quality, short squeeze potential, and showing fund accumulation. Fundamentally, I had enough reasons to buy. Industry wise, I had enough reasons to buy. Then I looked at the chart. Price came to the yellow direction line and went up from there. That gave a possible pullback setup. In addition, it had a bull release signal. So in addition to the possible pullback setup, I had a bull release signal. Another reason, yet another reason to consider buying. Stop would be just below the yellow direction line, and the exact location could be decided using Q protection signal. This is what I shared around 10:40 before 11 a.m. Let's see how US Steel closed. remember the market closed quite bearishly for the week for all the market ETFs, but how US still closed? Let's look at that. US still closed bullishly, and if you notice the big move indicator, when I first shared it, let's go back to the post. See, around 10:40 a.m. on Friday when I shared it, big move had one dot. Bull release was already there, but big move had one dot, and of course it was morning session, so volume was not above average yet. What happened by the close? As of close, I see big move up too. So bigger move happened by the close. Bull release was there earlier. At the close also the bull release remained, and notice the huge change in volume. Of course we expect some change between about 10:40 a.m. to market close, but this was a much bigger change on the bullish side. Not only above average, it is very heavy volume as shown by the dot on the activity indicator. So from the time when I first shared it, it turned even more bullish, though the market closed bearishly, and the relative performance sharply tilted up, showing that it outperformed the market. Did it actually give a pullback setup? Yes, it gave, and excuse me, we may also look at the commentary for that. I started showing this latest version of commentary since a few weeks ago. The entry chart commentary is divided into three parts. The first part is setup analysis. Any bullish setup comes up with green color, and on Friday US Steel showed a possible pullback long setup. So it confirmed at the close. Now I noticed the stock going up, industry going up, fundamentals being strong in the morning session itself. The market was still weak and Friday closed weakly. Okay, Friday closed bearishly for the week. I took a long position intraday using precision entry chart, real-time chart. However, I did not take it using stocks. I wanted to be more secure than that, in the sense that even if price goes down little bit and goes up, I wanted to make a profit in the trade. I didn't want to get stopped out by buying stocks. Instead, I used verticals. Verticals are very safe instruments. Why? Because they are defined risk instruments and they are very efficient under such circumstances. Why so efficient? Because I don't have to worry about getting stopped out. It's like whipsaw. I wouldn't have to worry about getting whipsawed because the market is still weak. Even if price comes down little bit and recovers, I will continue to hold the vertical position and I'll make a profit. In fact, as of Friday's close, I have a sizable profit in the trade. What kind of vertical I used? I used short put vertical. Short put verticals have an advantage because I bought, I didn't buy, it's short put vertical, but I took the bullish position in X at the swing low. So volatility was relatively high. By using short put, I had a short option strategy. That is very useful when I am taking the trade at the low, swing low in this case. So I have a sizable profit. I mean, percentage wise, a size that one would expect by entering a trade intraday. Have a nice profit on a bearish day taking a bullish trade. That is a pattern you will see in my trading and in other Q traders trading also hopefully, is that when others are bearish, I start to see if there are oversold signals from market breadth, hopefully in market ETFs, and then see, is there an industry, is there a stock that is bucking the trend and starting to go up even in a weak market, and buy them before many other people take notice. X or US Steel was one such example. Are there bearish trades? Yes, there are bearish trades, though in terms of the US market ETFs, all the market ETFs are not at swing high. That is where I like to short. So if I am thinking of shorting, what is one way of shorting? Many ways are there, in fact, if you are using Q signals and techniques, but let's go back and look at CSI 300. That is China index, and I mentioned that I will be happy if CSI 300 can break out of the trendline resistance, then I will be bullish. But it has not broken out, right? What we have now is price tilting down from trendline resistance with a bearish headwind. Is there a short setup in CSI 300? No. But if CSI 300 goes down, there may be Chinese stocks that are shortable, and some of the Chinese stocks are in the USA market also, listed in the USA market, and if I am not mistaken, PDD is one of them. Let's look at, okay, is it PDD or PDD.O? Let's try PDD. Yes, it is PDD. No, PDD.O. Yes, PDD.O, Pinduoduo. Remember the bearish headwind in the CSI 300. Pinduoduo also had the bearish headwind at the very top around the same time. Let's look at it using weekly daily. We have a bearish headwind, then a bear release signal, then a bearish indecision at the top. While that was happening, the daily momentum color, traffic light color, changed from bullish to neutral, and on Thursday it changed to bearish. Thursday also created a reversal candle at price extreme high. PDD is already at jump thrust high. Friday's candle shape is bearish. Very small candle, could not go up. In weekly, we have two bearish indecision in a row. As I explained in the master classes, one of them is significant, and when a cluster of them come together, we take more notice of them. Multiple bearish headwinds coming, not headwinds, multiple bearish indecisions coming one after another in weekly, and in daily we have multiple bearish signals and traffic light color changing from bullish to neutral to bearish. This is a stock I would not like to continue buying. Instead, if I bought earlier, maybe using the bullish headwind or probably using the first bullish flow after the bullish headwind, those were optimal buy setups using Q signals, I would book more and more profit. I would use trailing stop. I would not like my profit to erode. Is it still in an uptrend? Yes, in daily it is still in an uptrend. Do I short when it is in an uptrend? Of course, Q has multiple reversal signals and setups. I comfortably use them. what would be preferred instrument in such a case if I wanted to short Pinduoduo? As I explained many times, when it is based on reversal signals, there is a chance that it will stop me out and then come down again if I used stocks. So in this case, I would prefer to short using verticals. Again, those are defined risk strategies and I wouldn't have to get, I wouldn't worry about getting whipsaw. So for Pinduoduo, technically I wouldn't mind taking a short trade using verticals. What vertical would I prefer? I would prefer short call vertical. You could also use long put vertical. Both are possible in this case. Both have some advantages. I did take a short position in Pinduoduo on Friday using short call vertical and I have a very small profit in the trade, very small. I used intraday charts to take the trade. I have a small percentage profit in the trade, much smaller than the percentage profit I have in US Steel, that is a bullish trade. So these are two trades I took on Friday. X I shared publicly earlier and Pinduoduo I'm sharing now. None of them are closed, so both of them I'm sharing before knowing the result. They are in opposite directions and I'm using very different Q analysis to take long trade in X US Steel and short trade in Pinduoduo. One thing I want to also add that X had bullishness from every angle, be it industry strength, acceleration, or fundamental strength, or technical strength. Whereas for Pinduoduo, the industry may be weak. Friday was a weak market, but fundamentals are not that weak. There comes the question that do I always look for 360-degree trades? That is trades where industry fundamental technical aligned, and the answer is same as I gave before. If I ignore one of the three dimensions, sometimes is the fundamental one, and when I'm shorting at the top, not for buying at the bottom, but for shorting at the top, I'm okay to sometimes ignore the fundamentals. That is, even if fundamentals are showing strong score or growth, valuation score or growth in Q vital, still I'm willing to short sometimes, ignoring the fundamentals. But I would like to have technical bearishness, of course, like in this case, and I'd like to have industry weakness. In this case, this is a Chinese stocks I saw. There were reasons from CSI 300 also to look for shorting opportunities. Those were my thoughts when I shorted PDD and when I bought X on Friday. Now let's continue our breadth analysis using Q edge. Is the market oversold if we look from few other angles? That is, say, sector, industry, stock, advanced decline breadth from 1 month to 1 day. Yes, it is oversold. Everything is red and too much red. Too much red. All across sector, industry, stock, advanced decline. This is a pattern that is oversold. And we saw from bucket analysis that it is also near 30% level. On Friday intraday, you noticed it hit 40 to 45% even. From there, it has already recovered somewhat. And I took the bullish trade in X at the perfect time. We'll see how that plays out. Market is very bearish. That is also showing oversold condition. In terms of bucket analysis, also 86% of stocks are below mid Bollinger Band. What about technical breadth? That will be bearish, of course. The weekly percentages across all categories are very bearish. Nowhere for the bulls to hide. And if I look at daily pattern, they are also bearish. Though percentage of reversals are much more on the bullish side, the absolute number of reversals are much lower than the bearish strength. So together with strength and reversal, it is remaining bearish. Still, one may look for reversal trades. Remember, my analysis is showing that market is oversold. That is the time I start to buy stocks. X was one of them, but it was not a reversal trade. It was a pullback trade, and pullback is a setup that comes in an uptrend. X is still in an uptrend. But there are possible reversal trades, probably, as we can see from the technical breadth. I will, however, not look for bullish trades now. Okay, why not? I have some time. Yes, I have a few more minutes. Let's look for, let's take a step back. Let's look for stocks that are at weekly trend line support. So I came to technical breadth, weekly signals. From there, I went to bullish signals and flagged for stocks that are touching trendline support. I came up with 11 stocks. And remember, this is from my liquid stocks universe that has thousands of stocks. With a few clicks, I very quickly came to only 11 stocks that are at weekly trendline support. Okay, now it's time to look for their daily signals and setups. With one click, 11 stocks. I see from the setup column here, only one have only one has a possible trade setup, that is FGen, that has a possible bounce setup. So we saw it was touching weekly trendline support. I can see it is also touching daily trendline support. Now, not only touching, it is bouncing up from trendline support with a possible bounce signal. That is exactly what I was looking for, a reversal setup, isn't it? Based on the technical breadth, I saw larger percentage of bullish reversal signals and I have a possible bounce long setup. Bounce setups usually give, not always, but usually gives low risk opportunities depending on how much the bounce was. Let's look at the chart. Let's look at weekly, daily, both. Because remember, it was also touching weekly trend line support, and we came to know all of those things even before, much before opening the charts. Yes, indeed, it is touching weekly trend line support and touching daily trend line support and bouncing up from daily trend line support with very heavy volume. Interestingly, we have a very bullish shape candle here. That was a big move up, 3 candle with bullish pressure. Price has come down right to the low of that candle, and the trend lines, many of them that are coming together, those are holding. The white direction line is at the same place, yellow direction line, and in fact all the other direction lines are just above Friday's high. If I looked at the stock at the close on Friday, I would not buy because the Friday's candle has an upper tail. Let's magnify it a little bit. If next week price can go above Friday's high, that will in fact go above all the 5 direction lines, creating something that is called fan out. All the direction lines are coming together, and if then price goes up with a bounce from daily support, with bounce from daily trend line, also support from weekly trend line, that will give a low risk buying opportunity. And this is a live example of how I look for low risk buy setups in a in an oversold market. You may find similar other opportunities also. Again, Friday at the close I wouldn't buy it, whereas in case of XUS still I had a confirmed buy setup. Here looking at the upper tail and all the direction lines coming together, I would wait. By the way, I why not spend some time looking at the stocks fundamentals? Remember what I mentioned, when I'm buying, I don't want to ignore the fundamentals. I sometimes ignore the fundamental dimension only when shorting at the top, as was the case for Pinduoduo. But for FGen, I would like to buy only if it has strong fundamentals. Let's look at that. Retrieving data from Zenith. This is FGen. Valuation is medium, negative earnings growth. So fundamentally it is not strong enough to buy. However, I also notice that it is a biotech. In case of biotech, I am willing to buy ignoring the fundamentals, because many of the biotechs don't have strong fundamentals, especially smaller price, smaller cap biotechs. They are discovering drugs, and they may move up significantly depending on how their work is progressing, not necessarily depending on how their earnings is or how their valuation is. So in case of biotech, when I looked at that, it's a biotech, it's okay for me to buy so long as the risk is small. And I see in itself on a bearish day, 55% of peer stocks were up. That is showing strength in the industry. The stock also has a short squeeze potential. That is another reason to consider taking a long position. What about the industry score relatives to relative to other industries? The industry score jumped, not much change, neutral in fact, little bit positive percentage change probably. Let's look at the relative scorecard over multiple periods. It is one of the top 20% industries. That's a reason to buy. It is also showing high acceleration over 5 days. So I completed the 360 degrees analysis, and because it is a biotech, I am okay to consider a buy position in FGen on Monday if price can go above Friday's high. That will give a that will be an entry using the bounce long trade setup. And by the way, once again, if I look at the expert commentary for the entry chart in the setup analysis, you see the bounce setup has now come up with green color. Consider a bullish trade only if it drops sharply and suddenly, and that will confirm the bounce setup. I wouldn't mind taking a long position because price came nicely to the low of this very bullish day, which had big move up 3, and now if it goes up, this pullback will mean shaking out of weak hands who bought on that day. That will give a low risk buying opportunity. Again, a reversal trade example. There are different ways, as you can see, using different workflows, that the Q systems can be used. I try to cover different techniques in different sessions. We are at 1 hour point. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session, most likely during the next weekend. Have a great weekend, and as this live analysis show, there is no reason not to do that. Trade profitably. Thank you.